Hey guys, there are many people in this world who are a little short. It just so happens that I'm one of them. So in today's video, I'm going to explain why I'm not bullish anymore, why I'm more leaning towards the downside in the immediate term. We're going to look at the large tech stocks, the S&P, the NASDAQ, some of the trades that we've taken already. And now, we also have to look at downward targets and upside targets as well. All right, so without further ado, let's get started with the video. All right, so this is the Discord server, the Swing Trading Signals channel. And these were the results overnight. So our Nvidia, SPY, and QQQ calls were up huge in the morning. That worked out really, really well. And here are the results from the daily recap channel, where today was 8 for 8. 8 trades, 8 wins. Monday, 7 trades, 6 wins. Okay, so clearly, we've been doing very, very well to start the year. Over the past few weeks, we're also on a 93% rate of trades working. So it's working out really, really well. All right, so now this is a chart of the ES, the S&P 500. Now, what were we doing this entire last few days? I was explaining that we were going to look to go short at the time where bulls are looking to take profit on their longs. Where did that occur? You remember on January 3rd, as well as, just in general, like the last few days, I was saying that there was a bit more room to the upside for bulls. There was a bit more room for Tesla. When we went long Tesla at 386, there was a bit more room to the upside. That's where we got that move to 420. On Nvidia, on AMD, Google, Amazon, Apple, we saw all of those stocks, and we saw that they had a bit more room to go to the upside before the inevitable drop. Okay, same concept with Apple. I can just show you. We were talking about Apple, going long Apple over here on this candle right here. I was saying this is not necessarily a strong setup, but you cannot go short on this candle. You can't go short on this candle. There's a bit more room to the upside to go before the market makes a decision. This was across the board on every single setup, on every single tech stock. And we caught the move to the upside very, very well. Currently, we also are catching the move to the downside. And now you're probably wondering how did you understand that it's now the time to go short? What were the determining factors for you to do this? Number one, it was Nvidia. So Nvidia was the number one reason why I initially went long on the entire market. Nvidia acting like this is, again, the number one reason why I'm bearish. Okay, so now, just to recap of the last few days, Nvidia, also just in general, right? Nvidia leads the market, okay? We were long Nvidia on January 2nd, okay? January 2nd, we were long Nvidia. Nvidia was up 3%. That day it was up 3%. January 2nd on the S&P 500 was a red day. January 2nd on the NASDAQ was a red day. Okay, so the move in the S&P 500 and the NASDAQ was red, while Nvidia was green. Yes, that's exactly what ended up happening. Nvidia tends to do this. It has been doing this for months. Okay, so when Nvidia did this, I realized this was an amazing opportunity to go long. This is an inverted head and shoulders pattern, nice bull flag pattern, showing a nice bullish potential move with the NASDAQ and the S&P at a level of support. This was going to start pumping. We also had news, the CES conference. I was explaining how the CES conference was going to be a huge, huge determining factor to be bullish into. As you know, with earnings, there's something that I like to call an earnings run-up. That say there's an earnings date here, price tends to increase into that date. After the earnings, price tends to fall. Or a major news event. Price tends to rise into that news event, and that's why it's known as buy the rumor, meaning buy the run-up into the news event. Buy the rumor, sell the news. This was a buy the rumor, sell the news event. Once this, at the end of the day, once you start seeing this weakness at around 10 a.m. on Nvidia, 9:45, 10 a.m., once this started to break down like this, especially after the 10 a.m. news that came out, the PMI, the Chicago PMI data, once that came out today at 10 a.m., this was an amazing opportunity to see weakness in the overall market. Because why? Why was this an amazing opportunity? Why couldn't we look at the weakness in Tesla? Why couldn't we look at the weakness in Netflix? Just technically, right? Netflix was also weak. Google was also weak. The entire stock market was dropping. The whole market was dropping after 10 a.m., right? Why is this move in Nvidia so important? More important than all of the other large tech stocks or any other stock on the market? It's purely because Nvidia was the main reason why we started to rally to begin with. Nvidia was the only large tech stock on this day, on January 2nd, the day before the market rallied. Nvidia was the only stock that was green. So because it was the only stock that was green, because it was the sole determining factor of why the market started to rally, when you started to see weakness, strong weakness out of Nvidia, the sole determining factor was not going to be applicable anymore. So does that make sense? Because it was the most important stock to look at. Once that one started to show a lot of weakness, it was basically over. What you really wanted to see on Nvidia instead was you wanted to see Nvidia stagnate. You wanted to see it hold support. You wanted it to at least hold the 144, 145 level. That's not what occurred. We dropped almost $14, $15 today. $13 from 153 to 140. So this is obviously not what bulls wanted to see. And because this, like, the entire market was hoping that Nvidia continued. It was hoping that AMD, chips, etc., hoping that these stocks continued. We could see that AMD closed below the bullish above level that I was talking about. We had a solid close. We gapped up. AMD dropped because Nvidia also dropped. This is not what bulls wanted to see. And because I saw this occur at around 10 a.m., it became so simple to just lean bearish the entire day. Currently, our swing puts are up almost 50-60%. So this is, it's just, trading is really becoming very simple and very easy, and it's a blessing. But regardless, we're catching the moves to the downside. And it's really purely heavily dependent on what Nvidia is doing. You didn't even need to think about anything. Like, you didn't need to think. The next time, so say for example now, just as a learning experience. By the way, if you guys are liking and enjoying the content and everything, please make sure to like and subscribe to the channel. Put on your bell notifications. It really helps. Go ahead and do it. What was I saying? Yes. So as a learning lesson, right? As a learning lesson. Say in 1 month, Nvidia starts to move before everything else does again. Very, very simply, when Nvidia starts to drop and really starts to capitulate before everything else does also, time to become bearish. All right. Very, very simple. There's your learning lesson. That's what we could learn out of this. And we are short, and it's working out really well. We went short on the S&P at 593. We went short on the NASDAQ at 521, 522. So clearly those are both working out fantastically. Nvidia was really just the main factor of why we dropped. And if Nvidia could have held its own and stagnated a bit, then love could have came into the other tech stocks, but that's not what ended up happening. What we could do now is look at what the next steps are. How much more room to the downside do we have? What is going to end up happening now with the S&P, the NASDAQ, the large tech stocks? Are they pointing more downside? Or are we out of support now? What's going to happen? All right, so let's go ahead and take a look at the other large tech stocks first. Depending on how bad they are, we're going to get a better understanding of how much more room to the downside there is. All right, so we're going to end that with the after the, we're going to look at the S&P and the NASDAQ after the large tech stocks. All right, first and foremost, let's take a look at Apple. All right, Apple technically made a new low today, but it closed above the recent, most recent low, and this is not an automatic stock that I want to just be completely bearish on. But once again, this is weak, okay? This is a weak setup. To call this a bullish setup or a good spot to go long, it's Apple. At the end of the day, the last few months, we've had a major rally. Apple has been a leader. But, if there's ever going to be a stock that you want to be bullish on an ugly setup, it's Apple during these sorts of environments. But, we're holding support pretty well. We're holding the Bollinger Bands. Yes, Apple can come back to 238, 240. Apple still has room to go there on this bearish setup. We could definitely see that. But then, if this 240, basically the main zone is between 236 to 240. Apple is likely going to touch that, in my opinion. Okay, Google. So you can see that Google closed. It wicked above, and it almost made a new all-time high above the bullish level. What ended up happening was we closed below it, and this is a red signal now, a red candle. So this is, still bullish, right? But because we had this rejection, it's not the most bullish sign, but we are technically holding support. So far, we've seen that Apple and Google are both somewhat bearish momentum, but also holding levels of support. Okay. Microsoft, clear rejection off of the bearish below level, looks very nasty, right? Microsoft's been one of the most nastiest stocks. It's holding below the bearish below level, one of the most bearish tech stocks currently. And you guys could look at it like this. There is a lot more room to go to the downside on Microsoft. This is a much more bearish setup. Microsoft, it could break below 421, and we could see into the 410, 413 area. If it's really bearish, we can come back and retest this trend line, and this would be around 400. So there's a lot more room to go on Microsoft, in my opinion. Amazon, how is Amazon bullish? How is this a bullish setup? So this is clearly bearish. We closed right at the bearish below level. This is bearish. Yeah, we could, on Amazon specifically, we could get a small bounce, but this is not a place where I would be comfortable to go long. This is a place where you throw a feeler bet. It's like, okay, I'm going to try to see if we bounce from here. I'm going to go light. This is not a place to go heavily long. We could easily drop down lower. We could easily come back to around 316, 318 area. Meta, same concept. I mean, this is not a place that I would feel comfortable going long on Meta. Yeah, we are still holding above the bullish level, but this, again, like we rejected. This is generally, if Meta does want to continue holding, it could continue like to around 650, 660. I'd be very surprised. Like, if we hold this level of support, then yeah, of course, like within the next few weeks, Meta does look like one of the most bullish setups. And also Meta does tend to hold support, and it's very, very algorithmically driven in the way that it trades as well. So Meta does have room to hold above 614. But now the issue is this is clearly bearish momentum. So, like, the risk reward is to the downside. That's my gist of it. Like, the risk reward is to the downside with a target around 600, 595, 600, to be honest, on Meta. So that's also a bearish setup. And we checked out AMD and Nvidia already. Netflix, like I said, like, Netflix dropping was not going to cause the market to fall. Really flat sort of trading on Netflix, not really doing much. And of course, we saw Nvidia. How is this? Once again, look, on Nvidia, right? Intraday, cool, we could get a bounce. After a big drop like this, sure, we could get a bounce back to around 142, 144. By all means, we could get a bounce a bit higher to 145. But the point is, this is not a really, really comfortable time to cover all of your shorts. This is not a comfortable time to go long, first of all. Yeah, we could hold 138 as we could hold 138 as a stop loss. So going long here, 138, sure. But when you have momentum like this, a sell the news event momentum like this, it's kind of bearish. I don't know how much room we're going to go because it is still Nvidia at the end of the day. This is still one of the leaders. So being aggressively short on this, it's not like being aggressively short on Microsoft with a very, very terrible setup. We already had a huge move. This is already down almost 7% for the day. But how much more will it continue now is the question. And that, my friends, is I don't think it's going to be as relevant. And I could be wrong about this as well. But, you know, I think even if... never mind. So basically, I mean, look, like, if it holds 138, we still have a chance. But if it starts to break the 144, 145 level, even 143, 144 level is going to be a make or break level for tomorrow. It's going to be a make or break level for tomorrow. If we cannot break above, this is going to be an amazing, amazing opportunity for the shorts that covered or late bears. It's going to be a great opportunity for late bears to reshort. And that essentially would be a disaster for this uptrend that's currently being formed on Nvidia. And that is looking like it might end up happening, though. You know, I kind of missed the short on Nvidia. Unfortunately, I just stuck to shorting the S&P and the NASDAQ, unfortunately, but those are up. But Nvidia was the short. It was a really, really good short. Once again, the level for tomorrow is 144. If we can't break above that, that's going to be the level, that zone area where shorts are it's going to be a make or break level. It's going to be a deciding factor of whether or not bulls are going to reclaim or bears are going to reshort and make new lows. In my opinion, that is what's going to end up happening. We should continue dropping. I would be shocked to see the market just make new highs tomorrow. I'd be kind of shocked. But it all depends on early morning trading, after hours, and things of that nature. But once again, I'd be kind of shocked to see a really, really bullish move into tomorrow and like a retest of 148, 149. I don't think that would happen. But it could. Let's see what ends up happening. I have no idea. But all I do know is we are up on SPY puts. I essentially wanted to go short on the S&P at around 595, 594. But we were day trading. So I didn't take the swing trade until later, unfortunately. But, you know, this is the S&P. We are here. We essentially went short. We got 592 puts. So we went short basically as this level of 593 broke. I was bearish. I was going to get swing puts as soon as the entire move with Nvidia was happening. As soon as that news at 10 a.m. occurred, I was going to end up going short. But it is what it is. But look, this is so now. What do we have here? Objectively speaking, what do we have here on the S&P? Number one, we have contracts that are up 50, 60%. Okay. Number two, objectively speaking, all jokes aside, 587, 588 area is a major level of support. Now, is this a place where you would want to go long? Maybe. I wouldn't. Not really. There is more downward potential. And the entire end of the day, you felt that just bearish, just overburdening, just slow bleed out that just felt very, very weak. Any sort of these amazing bullish setups were just sold off, and it just felt very, very heavy. It's because the market ended up shifting bearish momentum. So any normal bullish setups were very heavy, and that's what I think should end up happening with tomorrow as well. I would be surprised I wouldn't be surprised for a gap up. Once again, I wouldn't be surprised for a gap up, but I would be surprised if 593, 594-ish area we close above it and we end up making new highs. I would be kind of surprised. That's that on the SPY. Once again, 595, 596. If we break above that, then that's going to be the place where market is going to essentially start to rally and continue up. But yeah, no, if this fails, if we don't, ideally, if we don't see 593, 592, if we continue, the downside target is most likely going to be 583 or lower. We're going to end up seeing lower. Right now, the risk reward is to the downside. It's still to the downside for Nvidia as well. But now it's just a matter of how much buying pressure is going to occur at these levels of support, because these are clearly bearish setups. On the SPY, this is a bearish setup, even though we are at support. But yeah, we're going to have to see. So for the NASDAQ, this is also not really what we wanted to see. Of course, we were above the uptrend line on the daily, but then we just closed with a very, very major drop. Again, this is just giving a really, the setup on the SPY, the QQQ, they're giving really amazing opportunities to take good shorts with not dignified, but levels that you can use as a stop loss. Good levels of resistance that you can go short at. 520, 522 area, right? So even if the market does bounce, we have this trend line, we have the 38.2% fib, and then we have the prior level fib at 522. These are all amazing opportunities to go short. So again, it's just going to really, again, throughout the entire day after 10:30, the market felt very, very weak and just pressure to the downside, right? Very, very heavy and weak. It's going to take a miracle for bulls to catch up from what just happened today and change their entire tune and become very, very aggressive. That's the issue. I don't think that that's going to happen tomorrow. So because that's not going to happen tomorrow, in my opinion, the market should continue falling. That's why we're holding on to runners overnight. It is what it is. If it doesn't work out, it doesn't work out. But you have to trade with what you got. It clearly felt bearish. And now we're going to see what ends up happening at the level of resistance now. If we do get a bounce. If we don't get a bounce and if we remain below, then yes, we are going to break below 512. 510 to 512 is going to be a very major level of support on the NASDAQ. Not much else to talk about. Not much else to do. The one thing that we could look at is the bonds. So the bonds are making new highs. And this is also, I was basically saying, as we were making new highs, when the junk TLT does well, this is very bearish for the market. And what's been going on? We have had 3 consecutive highs. We just finally break down lower. So, yeah, that is bearish. The VIX does look like it has a bit more room to go to the upside. We held 16. So the VIX, once again, the VIX is important to look at because it has an inverse relationship to the market. If the VIX is rising, obviously the market should be falling, right? Inverse correlated. So the VIX, we have some space to go. We have a bit more room to go to the upside, held level of support. If that's the case for the VIX and it has a bit more room to go, that means there's a bit more room to go to the downside on the overall market. Tomorrow is going to be very interesting. It's going to be a day to see what ends up happening at levels of resistance. And of course, also don't forget that tomorrow is Wednesday. Thursday is a day off. So we have to see if they're going to try to paint a very, very bullish picture heading into Thursday, or if they're going to paint a very bearish picture. If we end up getting I don't want to say anything too early. Let's just take it one day at a time. Let's see what ends up happening tomorrow. If you guys want access to all of my live trades as I'm taking them, you guys want access to all of my swing trades, my day trades, everything like that, the link to join is down below. And I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I will see you guys bright and early tomorrow morning. Thank you. Have a good one.